Your share price now, let's put this all in context. In March 2008, we saw all-time highs on equity markets in South Africa and across the globe. March 2009, all-time lows, and it was a very sore point for companies across the globe. At one stage, your share price was trading just above 4 Rand. That must have been a tough period for you, particularly for your staff. Certainly, externally, everyone was saying, this is it for Old Mutual.
It was a very hard period of time. We were having to put significant amount of cash into the US business, and we didn't have a huge amount of surplus cash in order to put in. So the share price was clearly very low. It was hard from a customer point of view that all of our competitors were turning around and saying, is Old Mutual safe? I have to say domestically it was pretty hard because I have a substantial amount of Old Mutual shares that are in my wife's name, and my wife is saying, what is happening to our investments moving forward? So right the way through, whether it was our customers, whether it was our staff, it was a difficult period of time. And it is a period of time when, as I said to my executive team, everybody is looking at you. If you walk around the office with a head down, they will be depressed. If you hold your head up and say, it is tough, but we're going to get through it, then you'll have a ripple effect across the whole company. And I think we kept our nerve, and we just kept on bit by bit addressing the issues that we'd got. We put in additional finance, which we were able to do. We dealt with the situations in the US, so we put in our Bermuda business additional derivatives that staunched the cash flow going in. And bit by bit, then as the markets picked up, then the morale began to pick up. And it's quite funny, I've been, after this year-end roadshow, I've been round all of our businesses. The morale is higher than it's been for a very long time because we've come off the lows. And not only that, we have a clear path that we want to take the company that is exciting. For our South African companies to be involved with other emerging markets, which they've never done before, is exciting for people. For our international people to come and spend time learning how we do distribution down here is good fun. So, we're in a much, much better shape than we were before. But there is always caution out there. The word double dip is still there.
Well, that's the caution, and I want to pick up on that double dip, because we debate it extensively on the news desk day in and day out. Has the risk of a double dip now completely eliminated from the market, or potentially could we still see one on the horizon? I mean, we've got to look at what's happening in the Eurozone and the fact that we've got fiscal deficits looming very big across the developed world. So, in your opinion, and the fact that you've got that extensive geographic reach, what is your gut feel on this? Is the worst over?
I hate calling this, but you're pinning me down. I think as time keeps on going past, the chances of a double dip is receding. And there is more and more confidence coming back, particularly in the USA. And I think politicians realize that they've got to keep the economies going. They've got to run budget deficits. They haven't panicked. I think generally across the world they've been doing the right things. So I think that's giving time for the global economies to keep going. So I'm generally a bit of a pessimist, but on this one I think the more time goes on, the more it's receding. However, I run the group on the basis that we must have enough surplus capital and cash in case there is a double dip.
So you've planned for all the scenarios,
well,
obviously.
We have to.
Looking at your US asset management business and a potential listing on that front, talk me through your strategy there.
Yes, that again is really very exciting. Our US asset management business, we have around $250 billion of assets under management. So it's a huge business. We have almost 20 separate boutiques where they're all specialist different asset managers. Each of those people, the working partners in those business, have a equity ownership in their overall businesses. And we've been trying to work through, well, what is the best structure for it? the best way for full value for asset management to be reflected in the Old Mutual share price, and is there a better structure in order for our asset managers to get more business? And so what we're coming up with is the idea of doing an IPO over the next couple of years. We will retain somewhere around 75-80%, so it'll still be a significant shareholding base. But what our affiliates turn around, what these boutiques turn around and say is they're really quite excited about it, because the consultants and their customers, when they go out to do beauty parades, turn around and say, well, you know, who is the parent company? You're a relatively small boutique. When there is a quote, it would be easy for them to see this asset manager quoted in the US, 250 billion, and they'll say, oh, I see, you're part of a US listed group that has significant size. And our internal people, right there across all the affiliates, believe that they will gain more business from this structure.
In the restructuring, the reorganisation of the group, have you looked at your head office in London, positioned very close to St Paul's Cathedral? It costs you a lot of money on an annual basis. Is it necessary?
It is necessary. When you're running an international business, the fact that you're dealing with the Far East, the fact that you're dealing with America, the fact that we've got a significant size of business in Europe, then quite clearly we have to have a base in London. It makes it far more efficient to do so. But what I've got a team of people looking at quite strongly is what are the jobs that actually we could do in South Africa that we don't need to do in London. And I'm fairly convinced that there are some roles that we have there that could be done down here. So what you will see, I'm not going to say that the head office costs will reduce in price significantly, because running a complicated international group
they're coming in at about 800 million rand on an annual basis.
With regulation increasing the way that it is, there is a cost of running a complicated group. But we will be looking to increase the number of jobs that we've got in South Africa, because we believe that there are skill sets and we believe that there is the cost. And it is a trend that that we're looking at. One of the things that we are going to do is to do more administration, particularly for our German business in Cape Town. So we have done the trial, we're negotiating with regulators, and we believe that the base that we've got in Cape Town can administer the German business more cheaply and more effectively from Cape Town. And that's exciting, and that will be creating jobs as well.